The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 6th. Terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check on the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, we've got you covered. You can always send me an email. Let those fingers do the walking. Steve at TFNN.com. Inside the subject heading, if you'd be kind enough to put radio show question, that would be wonderful. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off 511 points, trade out at 24,519. That's down 2%. The S&P is off 1 3/4%. She's traded at 2653. The Nasdaq off only 0.6%. That's off 41 points. The Russell's down 1 1/4. The semi's off 2%. Trendy's down 1.5%. It is mean and red across the board. Spot volatility index today up 18% as we speak. That's above the plus 10%. So you'll want to watch that come day's end. You've got light sweet crude. That's trading off $1.75. Silver down 6 pennies. Gold is up $3. Leading the charge to the upside at stamps.com up $19 or 11%. Booking holdings up 15. Nettie's up 9. Okta Inc. up about 13% or about $8 to the downside. SVB Financial off $28 or nearly 12%. AutoZone off 27 and change. Mettler Toledo down 21. Children's Place off 18.88. Boeing down 16. So plenty to look at. Of course, I want to look at what you want to look at. The first question here, and then we'll go to the general markets, comes in from Alan T. And Alan is asking us, he says, hey, Steve. Hi, or he really said, hi, Steve. I say, hey, Alan. Wondering what your opinion on the new highs, new lows that are released daily. Did you ever do any work on this? And if so, what did you find? Talking more on an intermediate term base, not short term. So when I believe that what Alan is referring to is a new high, new lows for the New York Stock Exchange. And let's just switch over to that. I went ahead and modified the chart just before we came on the air. But Alan, what I do, and you're familiar with the chart that normally I would post here, you would see this chart at the top, New York Stock Exchange, and then panel number 2 would be the advanced decline oscillator reading. To me, that's more important than new highs, new lows. But I do have it. We've got new highs, new lows on here right now. And then I like to take a look at, on this chart specifically, where's the spot volatility index in relationship to its 50-day exponential moving average. So what I've got here at the bottom are the new highs, New York Stock Exchange. Right now, there's 6 out of the maybe 3,500 issues that are traded there. And there's 619 issues that are at new lows. I haven't found anything for me that has worked. I've tried crossovers, this, that, the other thing. Just haven't. If you do take a look where we're at, though, today, just out of curiosity, 619 net new lows. Last time we were down in this area, what I mean is on November 20th, you had 573 new 52-week lows. Turns out that just a few days later was the bottom out there, a bottom. A buyable bottom. If you go take a look at the trading day, and I'm not saying you'd use this necessarily, but just Hey, I'm just trying to give you the information. October 26th, there were 524 new lows out there. Well, we know that the New York Stock Exchange had made a bottomish area out here. If you come back to, looks like October 3rd, 526, there was a bottom. Now, when I say bottom, not like the bottom, but a viable, bouncy type of bottom out there. If you come take a look at what was going on inside of the New York Stock Exchange, February 6th, you got down to about 481. We keep going back a little bit further, come into November 15th-ish time frame. What was that? That was in the, let me see, about 308. November 14th, I guess that was a level out there. So to answer your question, no, I don't really use the new high, new low as some type of leading indicator as what is going to happen. But thanks for asking the question. So now let's go take a look at the general markets out there. Let's kind of step through this one step at a time. Step through this one step at a time. Am I not just the most natural, grammatical speaking individual that you've ever encountered? Well, we know the answer there is no. But what we can do is we can take a look at the 4 equity futures contracts. That's how we're going to start. ES is on the left. Next to that is the NQ. Next to that is the Dow. And then to the right of that is the Russell 2000. And in fact, I believe Ruby wanted to take a look at the Russell 2000. Here's what we know about the ES Mini. It formed a brand new box yesterday. Yes, even though the market was, well, the futures market was open until 9:30 in the morning. Formed a new profile, bullish in structure, meaning the center line at 2663, closer to the bottom, 2644, and the top, 2701. So you've tested the bottom. I don't know if we're going to close below the bottom. It would not surprise me that we do not close below the bottom, and the bottom being 2644. At this stage, yes, it was pierced, but this is an end-of-day reading that we'll want to take a look at whether or not that support level held. That's what I'd be watching for in the ES Mini. We take a look at the NQ. It, too, formed a new profile yesterday. The bottom, which is 6752. We're at 67.62. The Dow equity futures contract, that new bottom is 24,430. We're trading right now at 24,556. The top of that box is 24,614. Is that the top? Yeah, 24,614. So it's a really narrow. Oh, this has formed a brand new box just a while ago. Well, I'll be a son of a gun. Either way, right now it's just trading above the bottom. So, Ruby, you've got 3 of the equity futures contracts that has 113 have held support. We cannot say the same thing when it comes to the Russell 2000. If you and I were just going to take a look at trend lines, okay, and we look at trend lines, here's the trend lines. We're using the same equity futures contracts, ES, NQ, Dow, Russell 2000. What we can see inside the ES, it has held the trend line. What we can see inside the NQ, it has held a trend line. What we can see, and I'm looking at the bottom green line, we look at the Dow, it has held a trend line out there. In the case of the Russell 2000, it's made that 100% move of a move by testing the 1457.40 level. Now it's trading at it right now, which at 1457.50. So the question is, does it reject that? Does it close above that? You know, volume. I heard Tom earlier, so I think he was taking a look at the ETF structure for the IWM. It had volume. Right now, what I know is that 3 of the 4 equity futures contracts have held. And yes, Mr. Z, he's talking about good old perigee out here. That means we really should look at the NQ when we come back from this break. How did it possibly hold 66.33.50? We'll be right back.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow's off 470, S&P off 44. So here's what we know. Bull or bear, doesn't matter. The levels that we were looking at during segment 1 are levels that you want to be paying attention to. So, for example, if the ES Mini closes below 26.44 today, that would say, well, okay, you're going to at least go test the low from the trading day or October 29th. You should test that low. That's at about the 26.03 level. If you close above 26.44, support is held. The same kind of situation inside the NQ. Only its level is really where we're about trading right now, give or take. 67.52 is the number. If you close below that, well, then it says you could go test the low from, what was the date, November 20th, around the 64.49 area. And inside the Dow, the number is 24.430. Bears want to see it close below the bottom of that profile. Now, the NQ arguably has been the strongest of the indices. When I say strongest, what I would say is we're taking a look at this unique data point that exists in the world. Just a few of us really know about it because, actually, I mean, I developed it, so I sort of know about it. But here's the thing. You and I, for the most part, I just mentioned the word swing points probably a half a dozen times or so when we were taking a look at the previous page out there. And a swing point is the most logical place where you would see a turn. Tom framed it 100% move of a move when you get back there. He likes to look at volume as you're coming into that to let you know whether you're likely to take out that level or not. But it's a swing point. Swing point is like driving down the road and you make a turn, you make a U-turn, you know, because that's the direction that you go into. And so it's a very easy identifiable spot where previously there was a change in trend. When it comes to when the moon is closest to Earth during its lunar cycle, it can happen at any point in time, like at 7:14 a.m. on November 24th. I think that was the date. I think that was the time out there. It ain't a swing point. It's nothing. Well, actually, it's much, much better than nothing. It's something. It, for some reason, is a spot where you can see unexplainable support or resistance. And the NQ today is that example of it. Because as the markets were moving down, it got to that spot, that price point. It did this here at exactly 5:30 this morning. It was retested again. Now it's looking at a 30-minute time frame, by the way, and again at between 11 and 11:30 out here. And that level held. It meant for it to hold, somebody other than Stevie knows about this. That's the only explanation. Somebody else knows about it and defends it, or just jumps on the living you-know-what and beats the you-know-what out of it. And at this stage here, inside the NQ, why is Steve even going into this narration out here? Because I can't provide you with anything better, whether you're bull or bear out here, is watch 66.3350 inside the NQ. It has acted as support, and if those guys, gals, individuals out there, it's not hocus pocus, dominocus out there, it's real stuff. If they simply say bye-bye, adios, I'm out of here, well, that would be another important message for bulls or bears. Again, it's a 30-minute time frame chart out there, but boy, it's a really important 30-minute time frame line of demarcation. Now, the Dow, by the way, is back above its perigee level at 24,515. And we'll see if, in fact, that holds. So now it got back above it. It's coming back to test it. Is it like a trend line? You know, you're trying to break back to the upside. You come back and test it. Do you reject it? It certainly can be used like that. Again, it's really going to be the NQ. Now, let's stick with the NQ here. Let's stick with the theory that the NQ is where we're going to get the information from. Now, that was a 30-minute time frame. And a 30-minute time frame, too, by the way, it's not that unusual. I'm not being Tom Jones here in saying it's not that unusual. Well, I don't remember the name of the song here. But what we can see is that price was moving lower, doing less relative energy out there. Nice big bullish engulfing candle. Price stopped right where it should, which was the top of a 30-minute profile out there. That's at the 26.64 level. So that's an area where price would need to close above to say, okay, there's more rally to this rally inside. Oh, that's the ES Mini. Okay, well, the ES Mini had that pattern. I apologize for pulling down the wrong chart. Now let's come out here, take a look at the NQ, since that's what we were really talking about out here. So the NQ, there is no 30-minute profile to deal with. Its line of demarcation happens to be, how do you like how I use that word, demarcation? Happens to be that Tom DeMark setup trend line, this little green dashed line out here. And that level is, give you the exact number if I can, that level is 68.4775. That should be a super resistance zone should we see price continue to move higher inside the NQ. If you move above that, that would be an important message. It would at least be an important message that there's more counter trend rally to roll tide to the upside out there. Now, if you're wondering, you know, yesterday there was a counter trend rally, you know, even though the futures market was open until 9:30. Why did it stop at about, I guess the high that was made was at 8:30 out here? Why did it stop at that level? Well, because it is a Motown chart. It sings in the key of G. You can see if we take a look at start from that low bar that was out there at about 5 o'clock in the afternoon. That 5 o'clock in the afternoon time frame was on, what was that day? That was, give me the proper date out there, December the 4th. And then price moves higher, stops at the key of G. And then last night the market opens in a huge flush. Talk about just a huge move in really a short order out there. And so in the NQ, it just was revisiting those lows earlier this morning. So in the NQ, you know what to really be paying attention to the upside, I would believe, and to the downside. And what else can I provide to you? I don't know. If you take a look at the spot volatility index, we're still in the same gosh darn place out here. We're dealing with some type of short-term events out here. In other words, traders in the future are saying this stuff is not an issue. Whatever's going on short term, this stuff is just not an issue. This is not the situation when we're taking a look at the spot volatility index where people are battening down the hatches and they're saying, yeah, you know, this is a problem for a long period of time to come. Well, what the heck, Stevie, mean by that? You have the spot volatility index trading at 2468. You would think if traders really believed that there was something to be worried about into the future, we could, how far into the future do you want to go? Do you just want to go to February? You can go to February. The Futures price is 2020. It's like it's got 2020 vision out there. Or you can go to August of 2019 where it's 2013. Or you go to July where it's 1973. Yeah, so it's just whatever it might be out there, China Schmina, it's real, and we have to watch and look for these bottoms and levels that can be broken and where price might go to. But we also have to be cognizant of what does the data show to you and I. This is not the example of where this is, at this stage of the game, some type of prolonged event out there. Now, the cool thing is when we take a look at this and we say, not a prolonged event, what the heck are you talking about, Steve-O? Well, what I'm talking about is we can just simply take the Dow, we can go ahead and put it on a monthly time frame chart. That's the easiest thing to do. Let me get rid of some of these tools out here. Let me just turn a couple of things off. Oh, I can't do it in the next 10 seconds. When we come back, we'll finish off the Dow and anything else that you'd like. We're great. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we were talking, or I was speaking about the Dow earlier, and again, it's important to understand the market that we're in. And when we take a look at the Dow, it's just clear. It's very evident. We are inside a consolidating pattern. It's where it's the most clear is inside the Dow Jones indice out here. And we know that the high that took place in January January 26th, I think it might have been in 2018, of 26,616.71. Don't quote me on the day. Maybe it was 28. Doesn't really matter. The high of January. We know that is a resistance zone. Just simple swing points, if you will. We've taken out a bunch of the noise by just making it a monthly time frame chart out here. But we know that price got up there in September and October, tested that on a monthly basis, was not able to close above that level. And now price may come down. Like so, the low out here in February was at the 23,360. That level was tested in April and held. Maybe price is going to get all the way back down to the bottom. Maybe it won't, but that's a key level to be watching. We are in a consolidating pattern. In a consolidating pattern, there are some days, or maybe multiple days, where the bears feel wonderful, and then there's days or maybe multiple days where the bulls feel wonderful. And it's the reason to go ahead and be paying attention to things such as the TAS daily profiles, to pay attention to the trend lines. Have they been broken? Have they held? And of course, we do that by watching the daily equity futures contract. It's important to be watching patterns such as how did the Dow, for example, did it make a bottom? What kind of bottom did it make, for example, back on October 29th? The exact type of bottom was the exact type of top it made on October 3rd with that Rhodes momentum indicator signal. And on a daily basis, these are really important signals, daily time frame, even stronger on weekly. But from a daily standpoint, what price has done is come back here. This pattern hasn't failed. In fact, if anything, it had one heck of a nice counter trend rally, so to speak, up into the November 8th time frame. So it most certainly worked, just as it did back here on April 2nd. That set up a heck of a rally because that was a retest of the highs, as you know, from January, as we just took a look at it. And so we're just looking at the bottoming signals out here. And when that pattern arrives inside of the Dow, and we can take a look at the patterns, keep going back here a little bit further. Again, looking at the bottoms. Here's an example of where we saw similar to what we have today in place. This is back in August of 2013. You get that bottoming signal, and then there was a retest of that area between October 8th, 9th, and the 10th, and then it was, off to the races. So again, a pattern that formed, didn't fail. Maybe this one's going to fail, but here, if you go back into June of 2012, and James, this really is for you because James wrote in and was asking about, how often do these patterns fail out here? And you just have to stay within the time frame. So right now we're not looking at a 30-minute chart or a 10-minute chart or a 60-minute chart. Here's the daily time frame. And so we know the daily signal that was out there. Here's another one of these patterns in October of 2011. So the real question is, here's another one of these patterns in July of 2010. So you kind of get the hint out there that, boy, these are patterns worth paying attention to. And so inside the Dow, now we're really kind of in this junior consolidation, right? So let's come back over to the Dow. What the heck does Steve mean, junior consolidation? Well, it's sort of like junior mints. Who doesn't like a junior mint out there? Well, let's take a look at the junior consolidation. So we know we got the larger consolidation. Those are the red lines out here. But what we also have is as a junior mint consolidation, let's just put that bottom with a yellow line. Where's the yellow line? Yellow horizontal line, and so do we put it right at the bottom? We could, that's going to line up here with the June 28th low, so that's a possibility. But, you can kind of see, I'm just going to put it right here for right now, for the moment. Here's, in essence, the consolidation bottom. I don't really have the consolidating top because we didn't make here's your inverted head and shoulders. Yeah, I know out there. But I don't have dander, so I do not use the head and shoulders pattern out here. So that's kind of like the junior consolidation pattern inside of the Dow. So important to know your P's and Q's, exactly what kind of market, you might be in. And this is what we're in when we take a look at the Dow. So you, Mr. 666, or maybe it's a Mrs. 666, don't be sending me messages out here that we're going back to God knows where. We haven't even broken through a consolidation out here. It just blows my brains out there in any bit. So this is where we're at. This is where we're at out here in the marketplace. Let's talk about something else, right? Let's talk about, what do we want to talk about? We talk about, what do you want to talk about? What do you want to talk about? Gold. Let's talk about gold. What the heck is gold doing? Let's take a look at what gold is doing and all the other currencies out here. Stevie's just got to find the. There we go. Here's gold in dollars. Here's gold, and so gold is trying to form a new task market profile. I say it because, and it's a bearish structured one. So I've got bad news, or maybe good news, depending on whether price takes that out. Bad news, if in fact this pattern, this profile forms. No, the reason I say that is because it tried to form yesterday too, and then when I refreshed my screen, rebooted my screen is really, I really should say, it went away this morning. But, I meant to turn price off. And what you'll see here is it's a bearish structured profile. Now, bearish structure means 1247 is the top, 1238 is the center, the bottom is 1219. So right now what we can see that gold has done is that it's tested 1247.50. If gold is bullish, it really needs to close above that. The problem is that even if there's buyers of gold in dollars, they are not buyers of gold today in euros or yen or pound sterling. That's the problem. So there is a possibility here, just throwing it out there, that gold could be in a new trading range from 1247.50 down to 1219 out there. Not that there'd be anything wrong necessarily. It'd still be making slightly lower lows. I've said slightly higher lows out there. But on the other hand, if gold could find the mojo, and by finding its mojo, it can close about 1247.50. Then, like James had said with regard to the Rhodes momentum indicator signals, nothing more bearish than a failed bullish pattern. Well, James, on the daily chart for the Dow Jones, as you saw, those signals work really well, and they haven't failed yet on a daily time frame out there. So, so that's what I've got for you in gold. If we take a look at Treasury bonds, and I think maybe you've typed in a question here. Let me see. There's a question maybe. Steve, can you please show the Dow and other currencies? Yeah, I will do that for you, Coda. But first, let's just take a look at Treasury bonds out here. Huge groove. I mean, huge move. Although huge groove. That's a good band out there. Looks like Treasury bonds in dollars are headed for 145 out here. That's the high. That's nothing new. The high from August, but maybe they're headed higher because the swing point. Or maybe they're not. You've got 100% move of gold inside of gold. I said Treasury bonds inside of euros out here. So you can see this move that is made. So if you're long bonds, now is the time to just start being cautious. Start being cautious out here because of bonds and prior currencies getting back already into their prior swing point, as it is in dollars. Dollars has a bit higher to run. Steve Rhodes with TFNN. We'll be right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Hey, Jay, what did you mean about why do some work and some others don't? I just see that question there because I don't know what I was talking about at that time. So maybe if you remember what I was talking about, just type that in, expand on it, and I'll try to give you my take on it. Hey, I got the coolest message, Perigee. Okay. So I got the coolest message Tuesday night about 10:40 or so, as I was dozing off. Usually my phone is on vibrate, but it was on it wasn't on vibrate, and it was my daughter who lives in Washington D.C. I think you know she's building the one of the people responsible for building the Eisenhower Memorial there, which is really pretty cool. But she wanted to let me know that she had just left the rotunda. And stood in line for about three and a half hours in 39-degree weather. While she was in the rotunda, that's when the Bush family had come back as well. And the story was that the Secret Service wanted to clear that area out from all the guests coming in, and George said, no, just let the people come in. And so she's got these pictures, with the with the bushes, still sitting there. They were doing the changing of the guard at the same time, and pretty cool that she did that. So, in any event, so let me get back to that. First, so Jay, I will come back to. Oh, and she was caught on the closed circuit TV. So she sent me a picture of that. I guess one of her girlfriends that went with her, her mom, caught them on the TV out there. But hey, if I was living in that area, I certainly would have done that too. So. But in any event, let's come back to the charts, because I was talking about consolidations, and then Sylvia writes in and asks, is the Santa Claus rally in pause? Is Santa loading up on coal and things of that sort? And it is really important to understand that we are in this consolidating pattern. And that hasn't broke. If it breaks, then there could be some real problems, because when you break a consolidation, as you know, it generates a measured move that is equal to or greater than the consolidation. We're not there just yet. Let's just understand where we're at. Maybe that will just simply help with regard to the trading. And at this stage, while you're in a consolidation, you have to consider it to be trading really versus investing. The investing side would be when price gets down to the bottom of the consolidation or breaks out above the top, That's what, and so we've had other consolidations, and that's what's on my chart right now. It's the weekly time frame chart for the Dow, and this takes us back into the 2004 time frame. We can go back even further, but let's just do this on a weekly basis so you can kind of get the gist, make up your own mind with regard to what's going on. But back in 2004, the Dow was also in a consolidation. Now, because it's a weekly chart, you can see both the yellow dashed rectangular or squares out here in the price area, but then at the bottom you've got a time frame measurement. So back in 2003 to 2006, which by the way, during that time period we also had repatriation, albeit about 25% or less than 25% of what we have going on now, still going on. But that consolidation in essence lasted for at least 93 weeks. At least 93 weeks. You could even make the argument that it was more than 93 weeks. Oh, shoot, I thought that was just going to grab it just like that. It was even around 129 weeks before there was a final break of it. Yeah, so a couple of years out here. If you come back to the consolidation since the bottom in 2009, you had one in the 2011 timeframe, and so that consolidation, there wasn't really a clear break for about 82 weeks. It looked like there was a break at a much shorter interval, but when price comes back into it, which it did, well, it wasn't over. So you're really looking at 52 weeks. It's a year and a half, year and 3/4 out there. These consolidations can last long. We have the 2015-ish consolidation, right, up to 2016. That was 77 weeks. Sylvia, we could say coal if we want. I don't think consolidations are really that bad. We have to really put on our trading caps out here. And so we're only 44 weeks into the current consolidation, going back to the end of January to where we're at right now, December 6th. We're in a consolidation. I don't see this consolidation ending. I don't think that, look, you can have the most bearish outlook that you want. Doesn't bother me out there. I don't see it. I don't get it. I don't see trend lines being broken and things of that sort, and we're still in a consolidation. But that's neither here nor there. Don't get out your coal hat, if there is such a thing, until the consolidation is broken. And we're just simply not there yet. Instead, probably have the mindset that these swings that we're seeing out here, good, bad, or indifferent, it's just all a part of the consolidating pattern that is present. Now, I'm sorry for spending so much time on it, but I guess if there was one thing that I were to get across to everybody out there today, it is to know your P's and Q's, know your cuts of beef, and know your consolidation patterns out here. And that's what we're in right now. So, Sylvia, thanks for writing in that question out there. And what that does mean is that, okay, so we got to take a look at these shorter-term patterns from a trade standpoint out here. And, Jay asked a good question, which is why do sometimes it works, sometimes it doesn't? And what Jay was referring to, he was referring to my chart for perigee and apogee. And I don't know. And I know you were waiting with bated breath to see if I had some type of really, mind-blowing answer. And the answer is no, I don't. So just let's put this in perspective. Jay, when I first identified this pattern, just the history of it, just so you know, this was when I was looking for a competitive edge, right? And figured I had gotten a bunch of technical patterns that were out there, and I said, well, what's the one thing that I haven't really taken a look at that most people don't? Yes, Larry Pesavento does, and he brings on a number of guests that do take a look at these things, but is there some type of competitive edge? And so what I did was I went, I forget the name of the publisher, but somebody out there probably knows, that publishes the New American Ephemeris. That's the Bible of understanding where the planetary alignments are by day. That's where the P indexes come from. If you just simply go get for those of you interested in the Pesavento index date, just go get a New American Ephemeris. The one I have, I think, goes through 2040. I can't see it on my shelf out here. But get to the point, Steve-O. The point was I went ahead and I called those guys and I said, hey, you must have this on some type of digital format. Here's all the fields that I need. Can I purchase that from you? Sure. How much data do you need? You want 1,000 years worth of data? No, not really. So I took 600 years worth of data. Of course, that was way too much anyways. 300 back and 300 forward out there. And I was looking for, I went to all those significant tops and bottoms to see if there was some type of event, planetary alignment, something that was present all the time. And there wasn't. That was a real bummer. It was a lot of money, a lot of time, a lot of energy. But it led me to perigee and the Rhodes momentum indicator signal. It was well worth it. We'll be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So sometimes, you're looking for one thing, and if you open your eyes, you run into something that was always there, and you didn't realize it at the time. And that's why I do have, and I do believe, and I wouldn't tell you otherwise, that life is happening for us, not to us. Because I absolutely could have taken the approach that I'd spent a lot of time, a lot of energy, a lot of money looking for some edge and looking for those planetary alignments that I could that had a high degree of probability, and it just dropped everything. But I didn't, because there were some aspects that I had taken a look at, and all my work was done, Jay, on the ES Mini at that stage. It was the Dow and the cash indice and the S&P, but it was just the ES Mini out there. As I was doing that stuff, charting tools have gotten even better. They continue to improve. I've become a better utilizer of charts out there. But I noticed that during the time period for the ES Mini, that paying attention to where price was, because it was a random point in time. The weekends, I kind of said, okay, well, it's if it happens on a Saturday or a Sunday, you got an open and you got to close. You can kind of justify price finding support there, especially if there's a gap, so on and so forth out here. But the ones that were occurring, in the middle of a trading session that were just a random point in time turned out to be not so random. I was just kind of really blew my mind. And then, but at the same time, is when I had noticed and I developed that Rhodes momentum indicator top and bottom signal, like we looked at inside of the Dow. So, but when it works, and so now that's expanded to the other 3 equity futures contracts. John, Mr. Z in the den, has taken it to gold to take a look at gold. But gold's really not been in a trending mode. John and I talked about this last week or what have you. So it's not been in any kind of trending mode out there. So I think it's been kind of difficult to use. So in any event, hey, that's where we're at. Thanks for tuning in. Thanks for being here. I'll be back tomorrow on Fantastic Friday. Stay tuned. Your favorite polar bear, David White's up next. Have a great afternoon.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.